Hi, my name's Bob Bates, and I'm here to present my company Phantom's business plan, along with my colleagues Joseph Hill, Rachel Krevnick, Marlon Duke, and Walt Richardson. Just to give you a quick little summary, Phantom is basically a bunch of new computers that we developed in this new industry. We have three different models to fit different customer needs. We have the Wraith, the Spectre, and our new Ghost, all tailored to appeal to different segments such as in the innovators and workhorse. And so far, right now, it's worked and it's flourished in the market and with sales. Just over the past few years, we've led the industry in the computer sales, and as you can see from the chart in the previous slide, we've continued and continue to grow, and we believe that our gross profit is going to continue to exceed $2 million mark by the end of next year.
In the assessment of the current situation in the marketplace, as a company, we have achieved the highest market demand in 4 different industry segments compared to that of our competitors. The highest brand demand in each target region representing high customer satisfaction rates, with our Wraith brand achieving the highest demand at 822 units for the innovator segment, and then our Spectre brand achieving 263 for the workhorse segment. Another example of that would be both of our brands, Spectre and Wraith, scoring a 76 in industry results, which is 6 points higher than a standard industry, which is 70 for customer satisfaction rates. We are the top industry leaders across the scoreboard in all areas compared to our competition for the latest quarter. Our marketing performance was at point 221, which is the max in the industry, as well as our marketing effectiveness was at point 640, which is another max in industry, which means that we are currently satisfying all of our customers' needs. And we also hit above averages in the last quarter 4 for industry results across the entire scoreboard as well. And we created the highest total demand in the industry, generating around at 1,500, which is 700 above that of our strongest competitor. Our competition, Alpha and Omega, is the only competitor achieving higher industry standards in the traveler market segment in all areas of brand demand. There are competitors located in both of our target regions of APAC, NORM, as well as Europe. There were 3 located in the LA locations, 3 located in Chicago locations, which is 2 of our main targeted cities. There was only 2 located in the APAC region, located in Shanghai. And then there were 2 located in the Europe region, located in Moscow and London. And then there are only 3 competitors currently creating higher local media inserts, increasing their ad frequency above that of ours, starting with Microtech at 16, and then Computer Innovations at 12, and Alpha and Omega at 9. And currently our price points are placed higher than that of our competition in regards to both of our brands.
Okay, so looking at our company's strengths and weaknesses, to start off with our strengths, we are having 35% of the market share, which is a great deal amount. We are the leader of the market share. We have the highest market demand in the cost cutter, which is about 70%, and the innovator, which is 53%, the Mercedes, which is 52%, and then the workhorse, which is 37%. Our total debt to date is $0, which a lot of our competitors are having some debt. So we are one of the few that have 0 debt. For our industry results for quarter 4, we had the highest total performance, the highest financial performance, market performance, marketing effectiveness, wealth, and asset management. Looking at our weaknesses, we had a bit of an unexpected high demand, which led to lost sales due to stockouts. So we wanted to really focus on that and avoid those loss of sales with the stockouts. We also had 0.58% market share in the traveler category, which isn't that big of a weakness just because we're not really focusing on the traveler category, but there is always some room for improvement. Looking at our major problems and opportunities, one of our major problems and a lot of the other competitors was advertising. So our advertising had received poor ratings by Cost Cutter, Innovator, Mercedes, and Workhorse customers. So we wanted to really focus on those and see how we can improve those ads and really make them appeal to each segment. Our net demand is exceeding available inventory, therefore resulting in the stock outs of both computers, which was another one of our weaknesses, just looking at our demand. Some of our opportunities that we could focus on, we had the research and development in larger and faster cloud storage and ultra fast computing power. So we really wanted to build off of the research and development. The fixed capacity is currently at 25, but can be increased to 50 in the next quarter. Opening a potential new sales office to expand our sales reach and increase ad development in regional and local placements.
Okay, and our current marketing strategy. In Q5, we decided to enter 2 new brands, one being the Spectre Mach 3 and the Ghost Mach 1, to add diversity to 2 of our current marketing segments. The new product for the Ghost Mach 1 was a laptop to add a bit of a differentiation to our existing product design to increase high demand in existing segments. And another one was our setting our price points the same as the last quarter with our new and existing brands to maintain our industry lead. Since we generated a high number in demand in the last quarter, we decided to leave our price points the same, since we also achieved a ratings of 100 in customer satisfactory, meaning that customers are willing to buy our products at the price they're currently placed. We designed a new ad strategy after viewing the last quarter to see what region/city we are currently ahead in with demand and focusing on the strong and weak areas. And one of our strongest areas would be the APAC region located in Tokyo, receiving high demands and all across our target segments. And our lowest being in the NORM region located in LA, receiving the lowest demands in 3 of our market segments. So we decided to increase the local ad placements for Tokyo, since we're generating high demand, to keep the demand where it's at, if not to increase it in the next quarter. And we decided to increase our regional media ad placements for the LA office to create a higher media outlet to reach more customers. And then we also modified an existing brand, which would be the Spectre Mach 3, to satisfy customer needs in an additional target market segment. And we compared our ads to that of competitors who are also penetrating that market and achieving a higher segment percentages than we did. And we adjusted our priorities to fit the customer's needs.
Okay, so looking at our sales channel strategy, we really wanted to focus on opening and expanding sales offices to newer potential markets. This would include newer regions, and we also wanted to see if that would increase our demand a little bit more, even though we already had a pretty high unexpected demand. This would also allow us to avoid lost sales due to the stockouts, which, like I said, was one of our weaknesses. We also wanted to focus on potentially hiring more salespeople, this being with our current staff and our future staff. That way we can have more people working with the sales. And then we also wanted to target the market segment that Phantom views as the newer potential niche market. So we already have an established demand for the higher end product. We just wanted to focus on that quality and figuring out the best strategy for focusing on the higher end.
Our manufacturing strategy is solely based on our vision to produce high quality products while lowering overall manufacturing costs. Improving changeover process by reducing changeover time by 30%, reducing changeover cost by 20% would be really beneficial in order to produce our product quickly and efficiently. We also plan to reduce operating overhead by focusing on precise manufacturing strategies to save our company money. Improving the accuracy of demand projections to prevent unwanted inventory would also be very beneficial. Also emphasizing quality control, such as lowering defects in our devices. We also plan to efficiently increase operating capacity to keep up with the growing demand and ensure that lowering costs has no effect unless positive on the quality of our product.
So we are asking from you investors in finance for $5 million by offering 33,333 shares at $150 a share. We project a EPS of 36 by the end of Q8. Your return on investment is about 240% by the end of year 2. And I know that can be a little lower than some of the percents that you may have heard from other companies, but we are focusing on higher end segments, which requires heavy investments in research and development. And you will see in our financial statements how this can lead to big payoffs, especially in year 3 and further on. We are currently the top financial performers in the industry, which means we know how to handle our money. That means less risk for you when you invest with us. So as you can see from our cash flow, our heavy costs come from production, which is why we are focusing on trying to really improve changeover costs. Our other heavy cost is from research and development in quarters 5 and 6. This is because we want to have those newer technologies, those high quality technologies that really matter to the high end segments and really appeal to them. So we are placing a heavy emphasis on that. Then you can see from our net operating cash flow that even though, yes, quarter 6, we're still dealing with those research and development costs. When we come out and we start making a profit in quarter 7, we make a profit hard at 1.8 million for that quarter. Then the next quarter, we're expecting a 3.3 million profit. And that trend is just going to keep continuing on through year 3 and further. Let's see. In our income statement, you can see our earning per share at the bottom right. Our projected EPS is about 36. Again, just further driving the point of our operating profit being about 1.9 in quarter 7, then about 3.3 in quarter 8. And then our equity continues a upward trend other than an outlier point in quarter 5. Everything as far as equity goes is continually going upward. And as soon as we start making profit in quarter 7, equity goes up and it goes up fast.
For our tactical plan, quarter 1 was our business startup where we began planning our company's products. Quarter 2, we released our first 2 products, the Phantom Spectre and Wraith, and opened up sales offices in Chicago and Tokyo. Quarter 3, we continued expanding our business by opening up sales offices in Los Angeles, California. Quarter 4, we released our products, the Spectre Mach 2 and Wraith Mach 2. And in quarter 5, we released new brands, the Spectre Mach 3 and Ghost Mach 1, while expanding our sales offices into Europe. In quarter 6, we will prepare for a new brand to be released and invest in the research and development. Quarter 7, we will use what we developed in research and development to design a new brand for a new target segment. In quarter 8, we will continue to improve our product designs and quality while we emphasize the technological leader of the industry. Thank you for your time. We hope you invest in Phantom.